It's your boy, Big Dave, back in the house. Welcome to Sin City Crypto. This is your first time checking us out. We are an entertainment-focused cryptocurrency channel where we take the old, the boring, stale information, package it up in a fun and sexy way. Now let me introduce you to your other co-host. Hello, Robin. Come on, do my intro. Come on, it's fun. Play the game.
We do our show live in Las Vegas, Nevada, Monday through Friday, now on Sundays. And we got a big show for you today, Force Friday. And yeah, that's all.
That was good, man. That was good.
Was it good?
That was good, yeah.
Good? All right.
Go ahead.
Hola! It's your boy, Big Rob, with the actual Big Rob intro. Welcome to Sin City Crypto. If it's your first time checking us out, do us a favor, hit the like button. Do us a second favor, and subscribe if you're not subscribed yet. And then we got Force today, Force Friday. I'm excited. What a day to have Force, right?
Man, what a day.
When people are looking at the Bitcoin chart, looking at the portfolio, and they're asking themselves questions. They say, where is this going? We're going to give you answers. Stay tuned. And Bitcoin is at 21,000, right?
21 something.
We started the show. We started the show, was it yesterday? We were at 23.
23.
And now,
guys,
we're at 21.
There's so many exciting things happening today. We have Forrest. We're going to talk and show Gary Gensler. We're going to talk about our community. We're going to talk about the Fed of New York has no idea why Bitcoin isn't moving with macro. And we'll discuss that. We'll share their statements. Also, which altcoins are poised to bounce back hardest? Forrest has a list of those for us. And so, yeah, I'm excited. Also, if you are an XRP fan, throw the X in the chat. We have a special video coming out for you guys today. Some of our best work that we've done. And so, excited to share with you guys. Make sure to have your notifications on so you know when that video is coming out. I want to start with I saw crypto, I believe it was Crypto Mike 68. Crypto Mike 68's in here. So Rob was on Around the Blockchain yesterday, which congratulations, Robin, you won. Let's give Robin a round of applause.
Thanks, man.
You're welcome.
Yeah.
That was a genuine congratulations.
Okay.
We discussed the whole staking and Gary Gensler shutting down Kraken staking and shutting down staking in the US. And we had this conversation of what is that going to do to the average investor whose DeFi is hard to work around. It's hard to, people are scared to custody their own crypto because if they lose their seed phrase and all their money's gone, blah, 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 blah. Well, we had one of our community members reach out to us yesterday, and with his permission, I'm going to share the DM he sent us. And these are real people, okay? This is Crypto Mike 68. He said, just watched you on ATB. I'm one of the guys that has a hard time with DeFi. Small business owner with a family. I'm interested in learning how, but it's tough. The couple times I've tried to use it, I lost my crypto. Not a lot of money, maybe $200, but it's scary. I was trying to do some farming on crypto.com DeFi wallet. That didn't end well. And the other, I sent some crypto from my MetaMask to crypto.com, but sent it on the wrong network and it never arrived. I contacted crypto.com and they charged me $100 to send it back to my MetaMask. They had the crypto. I still don't understand why it didn't go through. It was some spell token. Anyways, sorry to bother. And that's when we started talking to him. He said, I'm one of those guys who works tons of hours trying to make a better future because I believe in blockchain, but it's effing scary. And then I believe he mentioned down 65%. And so that's what I was talking about yesterday. Is the average person who wants to learn, who wants to participate in the ecosystem, and they're essentially making it harder. They're getting shut out. And so what I want to tell you, Crypto Mike, is I'm going to do it. If you'd like to, we'll do a Zoom call for 15 minutes and I'll answer any questions you have about DeFi, how to stake. So that is my commitment to you, to our community. We got to do a better job. If the SEC, if these are the rules they're laying down and we can only use DeFi, let's help each other. The people that don't understand, let's go out of our way. Let's help them and let's get this thing going. We don't need the SEC. They can't shut the internet down. They can do whatever they want, but we will find our way around it and we can do it together as a community.
No, so Dave, if I may add something else also, I will say they can go in Discord. There is a lot of people joining there.
Yes.
They can help you out. They can give you a very good suggestion too.
That's a great point. And Crypto Mike, the Discord link is in the description of this video. Go join, my friend. Say hello. Our community is one of the most
I want
engaging.
to expand on just some preliminary thoughts on being new to crypto and trying to navigate the new space, because there's a lot of things. You got a seed phrase. Where do you keep it? You have off-chain wallet. You have staking. There's lots of things that have a pretty significant learning curve if you're new to the game. What I would say is I would first start by, first of all, not going into too deep on the risk assets. I honestly, especially if you're new, you probably haven't you're not familiar with what projects are established, and so something that's front and center that catches a lot of buzz might not be the best time to get in, and usually is not. So what I would say hey, stick to Bitcoin, stick to Ethereum, and a couple of other big names at the top of the list. I would definitely start. We are always, if you watch our show or watch anyone's show realistically, you're going to see this website, CoinMarketCap, and this basically ranks the top projects in order of how much adoption they have or how much money is locked up in them. And you can take a look at the market cap. I won't go too much in detail. I will just say that I wouldn't go too far outside maybe the top 20, and I would stay there. Your risk, as you go further down this list outside the top 20, you're taking on more and more risk. And if you're not plugged into the network as far as knowing what is been around for a while, who's developing what, who's making partnerships, something could crawl into the top 50, the top 100, and it might not be around for very long. So I would refrain from listening to friends that are saying, hey, this new coin, what? That's usually not going to end well.
Or it's too late.
Yeah, and not to say that you can't find some of these projects later on, but I will say that, until learn the ropes, I would just keep it simple. Buy on an exchange, a big one like Coinbase or Binance, and from there, I would just honestly, I would keep the tokens on the exchange. It goes against what we're saying, but at least in the short term, I would imagine you're not putting in life savings right off the rip. So if it's just a couple $100, if it's only, and a couple $100, that's subjective. So I'll leave it up to you. But if it's not anything life changing as far as money, until you learn how some of the protocols work and how DeFi wallets work, things like that, I would just buy top projects, top 20 coins, not move them around, keep them on the exchange.
Is it safe to say that if you are going to, follow your advice and use an exchange, Coinbase is probably right now the safest?
For our U.S. residents, yes. Abroad, I think Binance. I mean, we can throw shade at Binance, but if you had to pick an international exchange, it's the largest one, the one that's least likely to go under or to freeze your assets. And I would do that. And keep in mind, you don't want to permanently keep it on the exchange. So after you buy a token, then start, before you buy a token and then oh, I got to get off the exchange. I got to get off the exchange, and not knowing how to do so. I think the best path would be purchase, keep them on the exchange, do your research on what hardware wallet looks like, either on chain or off chain, whether it's through a third-party plugin like MetaMask. Just take your time. Take your time. Yeah. You know what I mean? This is money here. Take your time. Smart, big projects. That would be my go-to for someone that's new.
Also, if you are willing to do a little bit of research, I would recommend a mobile wallet like a Trust Wallet over leaving it on the exchanges. You just never know. But if you're not comfortable, leave it on the exchange. I personally would recommend going with Coinbase, especially if you're in the US. They're a publicly traded company. They have to disclose their financials every quarter. And so not very low risk of them doing shady stuff because they're regulated and they have oversight.
And one last thing, when you decide to move crypto off an exchange, as we said, you should at some point do a test transaction first. Don't send everything. Don't YOLO, thousands of dollars or whatever, however much you have as the full bag. Send a test transaction, $5, $10. Make sure it goes through. then at that point,
Even I do that now, and I've been doing this for a while.
I refuse to send any transaction. I don't care, even if it's the same wallet address I've sent to you before.
100%.
I will always just send one test transaction and then just to verify that it goes through.
Exactly.
If you are new here, say hello, so that way we can drop an hola back at you.
Hola!
And we do have a few new people here today, so I'll just kind of go down the list. We have 1 second. All right, so we got Crypto Mike 68, as we mentioned. We got OCX Rider, That Jut, Armand Clark, Colin McDonald. We got Kenton, Macro Crypto, and Dan Engert. And is that it? Oh, no, he's been here before. Okay. And to all of you, hola! Welcome to Sin City Crypto.
So
today's club limit will be 300. Let's open up this damn club. Ready to get this thing started.
Yeah, man, I'm so sad I missed the dancing yesterday.
The
Also,
chat is sad.
we got a super chat from Fino. Will compound finance buy the ban on staking? I want to make something very, very, very clear. With everything we know now, this is not a ban on proof of stake protocols, guys. This is essentially a ban on custodial staking. So when you put your money somewhere, you give up custody of your coins and they take it and stake it for you. That is what's being attacked. So you can still stake Ethereum on chain. You can still stake Cardano on chain. And of course, unless something changes in the narrative, I'm seeing stuff on Twitter. Oh, ETH is dead. Proof of stake is done. That is not true. It is custodial staking. So everyone stop freaking out. Also, got an email from Kraken because I have some Polkadot staked on there. They say you don't have to do anything. It'll automatically be unstaked and moved into your spot wallet. That's it. So everyone stop freaking out. Okay, I know it's not a good thing they're banning it, but proof of stake is not going anywhere. ETH is not going to die. If you're on crypto.com and it's locked for another 2 months, you don't have to worry because if they abide by those rules and they stop their staking, they will automatically unstake and just move the coins into a spot wallet for you. All right, without further ado, I want to introduce to you our main man, Forrest. And that timing was terrible, Rocco. What's going on? Forrest, how you doing, my friend?
He's muted there, Rocco.
Rocco, let's unmute the man. Forrest.
Hey, what's up, guys?
What's up, brother? How you
Check
doing?
1, 2.
Mic check.
You guys
1,
can hear
2,
me all
1,
right?
2. Don't get me in a rapping rhyme, bro. I'm a remix rapper. Anyways, guys, if you're not familiar with Forrest, where the hell have you been? Pretty sure everyone in here knows who you are. If you don't, this is our main man, Forrest.
That's right.
Friend of the channel. He's pretty much part of our channel.
That's right.
From Sistine Research.
Forrest, is crypto dead? Did it die?
No.
Okay.
No,
Just checking.
it's not dead. I think
Seeing if it had a
actually
pulse.
continuation to the upside, but no, I mean it's just kind of crazy what's going on with Gary Gensler and the SEC as usual. But it's like they're so incompetent that it's just like it's almost lets you sleep well at night because if they're this incompetent, it's like if they really want to attack crypto, like how successful will they actually be?
Right.
We'll see.
And we're going to get into Gary Gensler. He did do an interview with CNBC Squawk Box. I want to paint a scenario for us, and I want you to pick a side here, okay? You have one side saying this ban is actually a net positive. It'll drive more people to what crypto was supposed to be, custody your own coins, participate in the ecosystem, stake it. It'll stop, because right now, Lido and Coinbase are number 1 and number 2 in Ethereum stake pools. So they're saying ETH will now become more decentralized. People will have to go stake on chain. So those people are saying it's a net positive, this ban on staking. On the other side, you got people saying, well, this hurts the average investor. It's going to hurt people participating in the ecosystem. And people are more likely to just exit the ecosystem versus go out and learn how to download a MetaMask and link it to a stake pool and find a stake pool. Which side of the fence are you on? Are you on this is a net positive or this is a net negative?
Sure. Yeah. So, like the downstream effects of it, I would agree that they can be seen as positive. What is the net negative here? Is just the proliferation of regulation in the space without really. It's just bizarre. It's like you had Celsius, you had BlockFi, you had custodial, you had FTX, you had all this custodial lending happening. right? And lending is so much more dangerous and risky than staking, especially when you're talking about staking ETH or Polkadot. It's like those are two really, really solid protocols, and they're going after Kraken and Coinbase. Kraken and Coinbase are like, of all of these centralized exchanges, those are the two exchanges that I trust the most, right?
Yes.
Gemini used to be on that list, but they had an issue with their lending service. But it's like these are the institutions that are actually, based in the US and actually compliant and actually put a ton of effort into being compliant. And that's what they're deciding to go after Celsius. It's just so bizarre. Staking is way less risky, in my opinion, than lending, but it's not the worst thing in the world. Like I understand, like, you can draw similarities between lending and custodial lending and custodial staking. Like, all right, it's basically you're investing somebody else's money off based on like on their behalf, or lending it on their behalf, staking it on their behalf. I get it, but I just am not a big fan of regulation to any degree. I think there's arguments for both sides. Like, I get that this may drive people to lend on chain, and it becomes less centralized because you have less centralized exchanges and entities staking on behalf of people. So, like, as far as like the decentralization argument goes, this is probably more decentralized. There's some positives, but regulation in general, I think, is probably net negative.
Yeah, the only positives come to a handful of projects that offer on-chain staking. So in the short term, sure, they'll see more influx there. However, this is a big step back for crypto adoption. This is a huge step back. This is an ongoing narrative where the U.S. is trying to halt the adoption of cryptocurrency. They do not want the integration of cryptocurrency into the traditional finance. They don't want it in the banking. And it is ever more apparent. The people pulling the strings is not Gary Gensler, it's the people above him. It's the money in the central banks. It is money from the large banks out there, the Bank of America's, the Wells Fargo's, JP Morgan Chase. They want to keep their hegemony where it is, where they're in control. And they're seeing competition, and they're trying to use their friends that they lobby in Congress and their political branches to slow down adoption. And you know what? It's working for them, man. They have shut down several projects, including a DeFi project, Tornado Cash. They are stopping service after service through the exchanges. And they're using the fraud that a handful of individuals have participated in to slow down the whole damn thing. And yet they're not making any progress into clarity and to regulation that fosters good behavior. And if you wanted to get rid of the fraud and, not your keys, not your crypto, who knows what you're doing with it, then let's set up guidelines for it. Because this 1930s securities law thing that is time and tested, it doesn't apply to crypto.
You know what else was time and tested? The typewriter.
Exactly. It's just, I don't know, man. The U.S. is now going backwards because the thing that I have realized is not that this is end all be all for crypto is in the U.S., but it makes me realize that there's more of this to come. The next will probably be a ban on proof of work in some capacity or limitations with, some kind of.
Well, they're already starting with, we want disclosures. How much carbon are you emitting? Blah, blah, blah.
So then you have that. Then, individual projects are going to be deemed as, securities. It's starting to get real murky and nobody knows what the hell is going on. And I'm just afraid of what this administration, especially the SEC, what they're going to attempt to do in the future, because they're leaving the battlefield confusing, and people don't know the companies don't know what to do.
And I feel like they're leaving tons of money on the table too. If you
they're making money. They $30 million. That's their fine. $120 million BlockFi. You have, $300 million here. And so if anybody's making money during the bear market, it's the SEC. They're doing a good job of it.
You know who else is making money in the bear market? Is Sin City Crypto, because we have people like Crypto Billy who are super chatting $50. He said, time to elephant press the like button. To show some love, tell your friends about Sin City Crypto. Let's effing go. Oh, and Jimmy, you're up. Yes. We appreciate all the support, you guys. Thank you so much. All right. Guys, make sure to cast your vote in the poll. What's next for Bitcoin? 15K or 30K? We're going to ask our friend Forrest. We're also going to talk about which altcoins are ready to bounce back first, the hardest. And so if you want to know, make sure to hit the like button.
And also put a 1 in the chat if you think that legislation and the branches of government are going to stranglehold crypto. Put a 1 if you think this is more to come and U.S. is going backwards. Or put a 2 in the chat if this is not that big a deal. You can still buy crypto on an exchange. They're not going to ban crypto. Stop worrying about staking. You shouldn't be staking anyways.
I think what we should be worried about is the on and off ramps and how the banks are being
1 and
targeted.
2.
So, all right, before we get into charts, let's get into some Gary. And by Gary, I mean Gary the Gun, Gensler. Like I did mention earlier, he was on Squawk Box, CNBC. And so this first piece of video footage, they talked about storefronts, and he referred to centralized exchanges as casinos yet again. And the old adage of they need to come in, they need to register, blah, 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 blah. So here we go. Mr. Gary, what do you got to say to us?
Law. Gary, I want to read you something. This is Hester Pierce, someone you know well. He's a Republican commissioner of the SEC. And
great respect for my fellow commissioner.
He disagreed with your decision.
Fantastic.
She did. I'm sorry. She disagreed with the decision. Let me just read you something. Using enforcement actions to tell people what the law is in an emerging industry is not an efficient or fair way of regulating, she says. Moreover, staking services are not uniform, so one-off enforcement actions and cookie-cutter analysis does not cut it. A paternalistic and lazy regulator settles on a solution like this one in this settlement. What is your reaction?
Well, the commissioner and I have a very good relationship. We chat regularly and have lively policy debates and debates around these matters. Let me step it back. The SEC staff is really dedicated, serve the public, work hard staff. And we have for decades used the various tools Congress has given us to protect the investing public. And if that means somebody is breaking the law, non-compliant, we do use enforcement. Where there are authorities that Congress has given us, we do write regulations, and we do both. And I would even just say, if you look at the history of insider trading, a lot of what we've done around insider trading starting decades ago was through enforcement actions. This is not something new at all.
Except with politicians.
All we're saying to this non-compliant, generally, largely non-compliant industry is come in and properly follow the law. Disaggregate.
I am so sick of hearing that. Come in, come in, come in, come in. Someone in the chat, RustyBot, I believe, said, all they have to do is just register and disclose, right? Let me ask you a question, bro. If you think it was that easy, you think Kraken would shut it down, maybe not a large part of their business model, but a significant amount of their business model, you think they would just shut it down and settle? Or do you think if it was that easy, they would just do it?
Well, I mean, to expand on what you said there is, if it's that simple, then why wouldn't they modify their earn? Because you're saying like, hey, all you have to do is
disclosures. Give disclosures.
Your risk. And so it doesn't sound like they're giving them an avenue to operate the business of staking and be compliant at the same time. It just seems like, hey, you have to, come in, you got to do X, Y, and Z, but they don't tell you what X, Y, or Z is. And they
tell you what A and B are.
They're using like, Japanese symbols and, not even the traditional letter system, So I'm just saying, bro.
What are your thoughts there, Forrest? Gary Gensler talks about there's a group of us that sit down and we discuss. And obviously, Hester Pierce's voice continues to be
Did
drowned out.
she call him lazy?
She called him, yeah, she pretty much lazy and paternalistic.
Oh.
Well, what
Do
are your
you think he's gonna get back to the office? Like, hey, Hester, man, we need to have a conversation here. Man.
I don't know.
Heard you was talking crap about me.
Hester, come in and talk to me. And then she comes in and he fires her.
Did you call me a
So,
cookie?
Forrest, what are your just initial thoughts on Gary Gensler's rounds? I know you've seen the videos, right? We didn't finish this video. We're probably not, but more of the same. Come in, talk to us. The laws have been in place since the 30s. What are your thoughts?
Yeah, I mean, this has been my stance for a while. Is there's no guidance. The water's been murky. They have not provided guidance. Yeah, like the closest thing they have is like the Howey test, and that's from forever ago. And it's just like even that's not very clear. There's no up to date guidance on this. And then aside from the fact that, as I was kind of talking about earlier when I first came on the show, it's like I think they're very incompetent. Like I don't think Gary Gensler could articulate what a blockchain is or what staking is. Like I would be very surprised if like
Well,
you just
Forrest, let me
ask
push
them,
back
hey,
a little bit. Let me push back. He did teach a class
that's
on
true.
blockchain at MIT.
Okay, that is true. That is
So
true.
he's got. I mean, I haven't watched the whole series. So
He does understand this. That is very true. I'm off base there. But regardless, it's just like the audacity that you have to do that you have to have for him to utter the words insider trading in an interview. I mean, just immediately, it's like we're trying to protect people from insider trading, and what we've done for insider trading is through enforcement. It's just bizarre. They've not done any like if you who's the first person that comes to mind when the words insider trading come to
Nancy
mind?
Pelosi.
Or exactly. And she's had zero enforcement.
Yeah.
So no, I definitely walk back on. He does understand blockchain. He comes across like he doesn't, but yeah, you're absolutely correct.
He might not understand though, because he taught a class on Bitcoin.
It was a while ago.
He might not really understand proof of stake.
I don't think he understands the intricacies.
Well, here's the thing. He does, he has been open to saying that he agrees Bitcoin is a commodity. He says it hesitantly, but he does agree that that's not a security. He at least says that. He hasn't really defined it as a commodity, but he says Bitcoin's not a security. And so I think
he said it. He said it's a commodity.
I'm saying he has said it, but he says it kind of hesitant. But he more leans on it. It's not a security, while everything else is for the most part. And I think that he looks at, and I think a lot of regulators, especially people that haven't used and haven't had exposure with altcoins, haven't used smart contracts, haven't seen the utility that they provide. I think that he just looks at staking as the same as a security. He does regulate securities, so I mean, he just by bias, he's like, oh, that's a security. No, I own it, and someone else controls it, and trying to generate a profit. Common enterprise, all the things check in his head. But what he fails to realize is that these have real world applications. They power a system, and yes, there is a foundation guiding the roadmap and the development. However, it is sufficiently decentralized for a lot of these projects, and it's a gas fee, it's a utility, it provides use case, and it powers the ecosystem, and that's it, man. And it's the same way that the U.S. government powers its ecosystem with tax revenue by taking the money that taxpayers use. That essentially is staking, right?
Yeah.
You have a head of a government that uses money that people pay to facilitate the network, which would be building schools and roads. In the same way, you have a private version of that. Instead of it being a monetary system that's driven by a government, you have a monetary system that was created by a private industry. And here you have the people that represent the network staking, aka paying taxes, to facilitate the network. And that's it. At its simplest value, that's what it is. What it's not is a stock that does nothing, that you buy and then you sit there and wait for profits. Now, there are plenty of examples of that in the crypto industry because these projects lack they lack utility, but
Guys,
that's not all the projects.
I'm sorry. I do not subscribe to any person of power, whether it be Jerome Powell, Gary Gensler. I don't subscribe to the fact that they're stupid and don't understand. I don't. Because you don't get to be a vice president of Goldman Sachs if you're stupid. You don't get to be the chair of the Securities and Exchange Commission of the world's most strongest economy if you're stupid.
Well, you can also be ignorant
That's what I'm saying.
hesitant to learn. You can turn a
ignorance,
blind eye.
And I think it's an agenda that's in place. And like you mentioned, there's a coordinated attack happening on crypto right now with the OCC, the DOJ,
There is.
the New York NYDFS with Paxos. We'll go over that in a little bit, and the SEC. And so I think that's what's happening. But don't try to sit there and tell me that Gary Gensler's dumb. He's not dumb, guys.
No, it's not.
Like him or hate him, he's not an idiot.
I will say one last thing. It is ignorance on the part that people don't want to learn about it. But the thing is that if you're going to regulate it and you're going to be the figure that is supposed to corral everything and have it structured, that's your job, you need to learn about it. You need to understand what staking is.
I want to regulate this space, but I'm going to sit there and act like I'm an idiot.
Exactly. If you're going to have a hand in how to shape it, and you don't want to do the inside on at least the benefits of it, and hold be able to hold an argument with somebody about its potential and how to have it grow without tearing down the systems and full of fraud, whatever. Sure.
This guy worked for
what I want to know is like all of this that we've seen come in after FTX, like where was all of this regulation before? Like where was all of this? Oh, we're going to protect American investors against these custodial lending solutions, against these custodial. Where was all of this when he was meeting with Sam Bankman-Fried? Where was all of this when he was on great speaking terms and had a great relationship with FTX? Exactly. Why is this coming now directed at Kraken after that? Where was this scrutiny when FTX was still embezzling millions of dollars?
Well,
why?
It's just
so blatant.
It's because they were leading the charge. They were the ones that like, hey, I got this. SEC like, yo, we're you know what? We don't care about the Treasury Department. What other departments? We got this. It fits in the 1930 securities law. We're going to handle it. And then they dropped the ball, obviously, with FTX, whatever. At least that's the way people look at it. So now the pendulum swings too far to the other side. They didn't do enough. Now they're trying to say, hey, look, we're doing our job. We got this. And
Gensler's facing a lot of heat from his counterparts at Capitol Hill.
And that's why I think more is to come, man, because a lot of people are pointing the finger.
So. How's there a change there? Who's in charge of being able to fire him?
They're appointed by the president.
Yeah,
they're appointed by the president. SEC chair is appointed by the president.
2 years, unless
I think he's got another 4 years.
No, he's a cabinet. He's appointed as a cabinet member. So next presidential election, 2 years. If Biden wins re-election, then probably another 4 years.
Well, hopefully
another 6 years. I mean,
we can. Yeah, I mean, there are people who are trying to. They're at least bringing him in and making him answer questions.
But cabinet members, come in and out of their position, frequently due to, retiring or, they say something in public they shouldn't have or whatever it is. So it's not out of it's not to say that if, Biden wins re-election, he'll be there for the next, however many years, but.
Well, Kraken might have folded and the term is 5 years staggered. So that one commissioner's term ends when the other one starts, or one chairman's term. Thank you for that, Rocco. So Kraken might have folded, some people say, but Coinbase is not. And so we tweeted this. We retweeted Brian Armstrong. We will keep fighting for economic freedom, which is our mission at Coinbase. Some days, being the most trusted brand in crypto means protecting our customers from government overreach. Those are not the only people, as the Blockchain Association calls on Congress to intervene and the SEC's attack on the crypto industry. And just a couple things I've highlighted. Blockchain Association CEO Kristen Smith has released a statement on the U.S. Securities and Exchange Commission's eradication of staking on the crypto exchange Kraken. They said, quote, the SEC continues its attack on U.S. crypto companies and retail investors, regulating by enforcement, and undercutting the potential of public blockchain networks in the United States. Staking is an important part of the crypto ecosystem, allowing individuals to participate in decentralized networks and giving investors more options to earn passive income. It didn't stop there. As Representative Bill Huizenga said, since Gary Gensler won't abide by his own policies to, quote, come in and talk, the House GOP will hold him accountable. Today, as promised, our oversight of the SEC begins with a request for documents surrounding their interactions with Sam Bankman-Fried, FTX, and the Justice Department, followed up by Tom Emmer saying, to be clear, staking enables more people to participate in the building of the next generation of the internet. Gary Gensler's regulatory purgatory strategy hurts everyday Americans the most, leaving them in the dust while these opportunities are accessible offshore. Do you think, I'm gonna start with you first, Forrest. Do you think there's enough heat from some big names in Congress, representatives and senators, to either get rid of Gensler or make him change course? Or do you think for as long as Gary's the head of the SEC, this is the path we're going down?
Yeah, I mean, I'm fairly cynical. So it's like if he's the puppet and he's been installed with a certain agenda, and the people that actually have the power to remove him are the people that installed him in the first place, and he's doing their bidding, so to speak. Why would they get rid of him? I mean, maybe he gets a ton of heat and they replace him with another puppet who's not too indifferent, and they buy another 2 years of this game. I mean, ultimately, on the point too of all of this stuff eventually moving offshore, it's like there's still demand for staking. Like crypto's not going anywhere. Like how many times did we hear about China banning Bitcoin? That headline hit every single year for 10 years straight. Then eventually they banned Bitcoin mining, but I believe they still have like a lot of the hash rate is actually still located in China in some way or another. Yep. There's demand for this stuff. It's like for anybody who plays video games. I just did like a blockchain gaming report, and I dove into this, and it was like there's these secondary markets for in-game currencies. So like with Web3 gaming, and I'm making an analogy here, and it'll make sense in a second. Like there's demand for people to like buy and sell in-game currencies for Web2 games. Like if a game has gold as their currency, like there's still demand. It's still bought and sold. It's just done on like third-party black market websites. And what the game is essentially done by banning the sale of that currency in game is they've just driven it elsewhere. It still exists. It's just, maybe a slightly smaller market, but it's still a very, very large and thriving market. What's going to happen here if regulation continues to occur in the United States? It's just going to move offshore. It's just going to move into people using VPNs. It's just going to be people using privacy-based solutions, privacy-based blockchains. Privacy layers are already coming to Ethereum. So people will still live in the United States and take part in this stuff. People are going to move out of the US and take part in this stuff. And the rest of the world's going to take part in staking and blockchain. And it's just going to move offshore. It's going to move into the dark. That's all it is. Like they can fight it all they want, but they will not stop it.
And then real quick, I just wanted to give a quick update. It isn't a full 4-year term that coincides with the presidency. It is 5 years, as we mentioned. He was elected by Biden towards the beginning of his or first half of his term. So, anyways, Senate confirms SEC Chief Gensler to full 5-year term. He is slated to be in his position until June 5th, 2026. Please
help.
Yeah,
please send help.
Another 3 years and 3 months of this.
Yay.
So.
Yeah. Unless our friends at Capitol Hill help us out here. All right, we do have some more stuff to talk about as far as staking. Charles Hoskinson came out and said, hey, I have an idea to be compliant. We'll talk about that. But first, let's jump into some charts. So, Forrest, the first thing I want to ask you is this big dump in Bitcoin, right? Looks like we're kind of stabilizing at that 21.6 level. What are the levels you're looking at? And are we likely to see 15K first or 30K first? and then we'll jump into some altcoins and maybe look at the Dixie as well.
Sure. So looking at Bitcoin here, this is something that we kind of talked about. This is, I think I referred to it on this channel last week as expecting a gut check pullback. And that's essentially what we've got. So like, we also kind of talked about like how yes, just this, relatively small, normal, healthy correction on a Bitcoin could really wash out a lot of altcoins. And some altcoins are actually holding up better than others. Obviously Matic sitting close to its recent highs at $1.27, holding on very strongly there. But Bitcoin here, sitting at 21.6, 21.7, it's only fallen from its recent high 10, 11%. This is pretty normal. We talked about the distribution here, our bearish divergence. That's like it's really to be expected after a from the bottom here, a 56% pump in Bitcoin, multiple altcoins doing 2, 3, 4, even 5x's in some of the lower caps. We can't be surprised here at all. Now, as far as whether or not I think we're going to get continuation in 30K versus 15K, I think it's more likely that we get 30K first. So just for reference, 30K would be right there. The reason being is I just don't know exactly, like FTX couldn't push Bitcoin to 15K, right? So what is going to happen here? Like short of, even if the SEC came out and took a ridiculously hard stance and saying all proof of stake is banned, all cryptocurrency is banned, that would still be so up in the air for like to be fought in court cases for years to come. There'd be so much gray area around it, and they'd have such a hard time winning those cases that it's just like it would make it might crash crypto in the short term, but I think it would pale in comparison to what FTX was. It's like if FTX can't push us down below 16, 15K, I really don't see what exactly is going to take us there now. Now, if that does happen, I think it's a great buying opportunity. But the other reason that I think we're going to see continuation onwards and upwards, and we do have to be careful here, of course. But the reason I do think, it's essentially we're at this point pretty much guaranteed to print bullish divergence in one of two ways. So we look at our RSI here. Our last little low here, our last low before we, when we found support, basically our second leg of this move, this was RSI sitting at 78. Very high, very overextended. We started printing that bearish divergence from the top. As long as this correction does not go past that level, right? A 16% correction, as long as we don't dip below 20.3K, and let's just say we find support here or we find support, somewhere in this region before we make a new low, we will have extraordinarily strong bullish divergence, meaning RSI is reset all the way, right? We have a lower low, a considerably lower low on RSI, followed by a higher low on price. That is bullish divergence. So if we bounce before this level, we print bullish divergence. If we go below this level, we also print bullish divergence. We just print hidden bullish divergence. So it looks something like this. So long as we don't just crash below 15.8K, this previous low here, right? We are already seeing RSI approach these levels. So if we fall below 20.3, RSI will be putting in a new low, right? And that means we'll be printing bullish divergence or hidden bullish divergence, vice versa. One or the other. It gets confusing, but you can print bullish divergence in two ways: hidden bullish divergence or straight up bullish divergence. This is one or the other. It's very confusing. But either way, if we bounce before, unless we just plummet, unless we just completely plummet through 15 or 16K, we're going to print bullish divergence, and that'll probably give us a really, really strong springboard for continuation higher. So we'll almost certainly get some sort of a bounce between there and there with that bullish divergence. It's a question of how much follow through do we get on that bounce, and can we come in and make a new high, right? If we can make a new high above 25K or so, this is that 25K psychological level. If we make a new high after making a higher low, then we're great. We're great. I don't even mind if we make a lower low from this, because this is just consolidation. I don't even care if we do that, because that's still a higher low from our springboard here. So I'm pretty bullish for continuation. If we just compared to last cycle, which I know is dangerous to do, but you get these a very similar pattern, right? Where we had this capitulation, right? That's in line with the FTX collapse, right? You run it back, you get that consolidation, right? And then you continue up higher. Right now, we're just getting a little bit of a pullback. Last time, what was the trigger, right? What was the trigger for continuation in the next leg of the bear market rally? It was that bullish divergence on the daily back in April of 2019. And that's when it really started to run. So it's to me, it's looking like we get continuation. We do need to be careful. Obviously, a large part of what's going to contribute to that is how the S&P 500 does. The S&P 500 can hold above its downtrend levels and its 21-week simple moving average, which we'll throw on here, right? Which is now pointing upwards, acting as support. As long as we can hold some support in this range, that would probably cause a little bit of this dip would cause a little bit of a correction in Bitcoin, maybe further down. But ultimately, if we can hold S&P 500 above 3950, 4,000 or so and get a nice little bounce, I think the crypto market has room to run. I always want to preface this with I do expect further downside in 2023, but we're just not quite there yet. We're only about halfway through Q1 at the moment, and my thesis has been Q1 rally into maybe April for a while.
And it'll be interesting, with the jobs numbers that came out after the last FOMC meeting. People started freaking out. Markets kind of sold off. So we'll see what the Fed does, if they stick with 25 or if they actually maybe bump one of these next ones up to 50. Forrest, can you before you
go ahead?
No, please go ahead. I was going to ask you to go back to Bitcoin, but go
I
ahead.
was going to say, I mean, look, it's like that's the base, thesis, but it's like if we start getting, if we don't see that bounce and things change and we really start to crash and lose these levels, right? Then it's like, okay, maybe we're going to 10K, but we can take signals here. We can figure out what's going on in this region and change our thesis along the way. But as of right now, we have really, really nice, a really nice, break in trend and a really, really nice push. And so far, all we're seeing is a healthy correction, a normal healthy correction following some overextension and some bearish divergence. Now it's a matter of how and when are the bulls going to start coming in? And it makes more sense to me to be bullish biased when we've broken bear market trends, when we've gotten this nice push. Usually trend continuation is going to be your friend. So right. We can always switch up if we see of the signs that we are going lower.
Let me ask you this, Forrest. If we're going to see, because we've had and I'm pulling up the numbers here, $235 million in liquidations in all of crypto over the last 24 hours. 54 million that was from Bitcoin, and out of all of it, 84.16% were longs that were liquidated. What are some levels of support or levels that we should fear for more long liquidations? And what are some levels that we should look for that shorts might get liquidated?
Yeah, so we're kind of at one right now. Right. This is why we're holding what's happening right here at this moment in time at 21.7 or so. As price goes below that, that's where you can no longer long on 3x long leverage and hide that liquidation point below this nice chunk of support here, this last swing low. So we kind of have a zone right. So if I just kind of carve that level out, and then we see our 4x long margin pressure level right there, which prior acted as support on the way up, made a lot of sense. Acted as support on the way up. And then we also have this, bear market low, which is going to be a level that a lot of leverage traders are wanting to hide their liquidation points below. And that adds additional support at around 20.6. So essentially what we have here, and then, potentially another level down here, if we just kind of look for the levels with the most confluence, we see that this is a really nice level, around $20.4 thousand. We throw on the 21-week simple moving average. We see that coming in and adding confluence here. So we have a couple of zones right here. So this would be, if we find support here, that would be the market's very hungry, the market's very bullish. We run it back and we get back into this range. That would be bullish. That would be a long trigger here. But if we break down from 21.7 where we're at right now, the next level to look at is 20.3 or so, which has been our prior kind of support level here, and has been support kind of in the past here. But otherwise, a full correction would just be a move down to the 21-week simple moving average, which after a bear market, you break through the 21-week simple moving average, you retest it. That's pretty normal. So that would put us at what from the top here, if I can grab it, roughly a 20% correction here. So that wouldn't be that weird to see even in a bull market, I'm not saying we are in a bull market, we're potentially in a bear market rally, but even in a bull market, a 20% correction out of Bitcoin, that's pretty normal. And that would just be retesting the 21-week simple moving average. That would be retesting this kind of margin pressure level here and this prior zone of support, this range here. So I could see us pulling all the way back to 19K and it not actually being that bearish of a move, which is kind of scary to think about what that may do to altcoins. But if you're looking for an entry point and looking to get long, I mean, here's 3 levels right there that you could ladder in. Various amounts, kind of like DCA into some longs if you are in the camp, as I am, that we have another leg in this bear market rally.
So you think 30K before 15K?
Yeah, I'm not 100% on that, but I'd probably say 70-30. I'd probably say 70-30. I think there's a really solid chance the bear market lows are in.
Community agrees with you. So we did a poll. 56% believe 30K is next for Bitcoin. 43% said 15K. Forrest, you mentioned altcoins. I know you're on the ETH chart. What's ETH looking like? Our friend Jimmy said he picked up another whole ETH. Was that a good move or should he have waited?
Yeah, so let's throw on the easy bands. Hey, we are a little overextended. There have been better times to accumulate or lower risk times to accumulate. I'm a big ETH fan, so I do expect bullish continuation for ETH as well. Is it ever really a bad time to pick up ETH if you have a long enough time horizon? As long as we're not buying up in the red easy bands, you're probably fine. Ideally, we want to pick up, down here at least below the 21-week simple moving average. If I was looking to aggressively accumulate, I'd be looking at anywhere under around probably this level, 1075, really close to these green easy bands, even in it, if we really get nasty capitulation and we see like the SEC go on a spree of regulation against Ethereum. Sure, maybe we get flooded all the way down into this green easy band region, and that's where I'd be looking to accumulate. Otherwise, for like some shorter term plays, shorter term positions, I think $1,500 is a nice psychological level. It's also kind of the bottom of this range that we've started to establish. I see no issues with bidding the bottom of this range. From a shorter term perspective, though, if you're trading, I'd probably keep a nice tight stop loss in here and let it fall back down to the 21-week simple moving average and start bidding around 1340 to 1350, which is a very strong support level. We see 1350 coming in as a very, very strong support level with our 21-week simple moving average just above it. So we could get the full pullback. Otherwise, I wouldn't be surprised if we actually just start establishing. Whoops.
And then just a little shout out to the chat. We do have a few new people here. A lot of this is compliments of Biomex. He's sent some friends over. We got Conrad in here, Physics, KDM, Anthony Biza, Tony Biza, probably related there, I'm assuming. And then Soren Snail. So to all of you, hola! Welcome to Sin City Crypto.
Forrest, what are some altcoins? Because, we saw a lot, big pull downs, with, we call it the Gary Gensler dump. What are some altcoins that are maybe showing some strong technicals as far as bouncing back, maybe bouncing back sooner than the other ones or bouncing back harder than the other ones? What are some ones you got your eyes on?
Yeah, so first, look, now is not a very low risk time to buy Matic, but I do want to bring it up because it has shown so much strength, and it just like Matic is basically in a bull market. Like the rest of the market is kind of in this bear market rally. Matic, since it's put in its lows, is essentially in a bull market, and as they continue to announce more partnerships and reach mainstream adoption, Matic looks more and more attractive. So if you can score a pullback to it's, and again, not a long-term position here. Anytime we're up in those red easy bands, I'm not looking for a long-term position, but if you want to, score a continuation play on this trend, I mean, Matic has not even flinched about the staking news. And the staking is like, I'm pretty sure you can stake Matic on Kraken. Like it just hasn't even flinched. So if you want to, look for a continuation on this, it's got a really nice tight trend line. You're risking it a little bit to be buying here. Otherwise, if you can get a pullback to the top of this range, a nice even $1 entry point, which we've seen as a big psychological level as resistance, turn that $1 into support. That could be a potential entry point. Also a fan of QNT here, which has been a little bit sluggish on the charts recently. In terms of it actually, unlike Matic, it actually has pulled back to give you a nice solid entry on this prior support or prior resistance, potentially turning it into support here at around 125 to 130, 133. So it's looking pretty decent. It is in what I refer to as an accumulation cylinder. So I'll just show you kind of a example of an accumulation cylinder that was actually a lot cleaner than the one we're seeing on QNT. This is crude oil, right? You see that accumulation cylinder start to wind up, and then you get a huge bull market. I'm not sold on this for QNT since we have put in this little top here, but if we can get if we actually get a bid here and start running up again, then that accumulation cylinder is in play. So it's a matter of, does this actually hold in this region? And if it does, it starts looking really attractive. Also, when you talk about QNT, yeah, it's an ERC20 token, I believe, but it's like ISO 222 compliant. It's like super regulatory friendly. They're going after like the CBDC market as well. It's interoperability play. There's a lot of like great stuff there that is probably a little bit more regulatory resistant or FUD resistant when it comes to regulatory compliance. You've also got just a really strong show of strength here in a bear market. When everything else was going down or very sluggish, QNT was able to rally from like $40 to $220, and we've gotten this correction, boom, and then some consolidation. And I do think we could see continuation. Obviously, where that falls off is like, look, if this goes in the other direction and starts doing that, then we got to cut our losses and look to pick up lower. But I do think QNT is has potential to run. Also, a really big fan of Chainlink. Someone in the Sistine Research Discord, one of our community analysts, pointed this out. So credit to Jay if you're listening. Chainlink showing very, very strong weekly bullish divergence, right? Chainlink looks ready to scream, and where I would really love to pick it up is if we got a nasty pullback. If things get really, really painful here, I would love to pick up Chainlink back down on this trend line at around just over, under $6, maybe a little over $5, which would be back towards the bottom of this range. We probably do something like that, print one last bullish divergence on the weekly before going up considerably higher. So Chainlink looking super attractive. Something that's like these weekly bullish divergences are really, really strong signals. I think one that did this, I'll show you an example. Obviously there was some news here, but the graph. And I'm not saying, I'm like not a super big fan of the graph or whatever, but we had that strong weekly bullish divergence, and then it launched in outer space. You look at Avalanche, I believe was another one where we had that strong weekly bullish divergence, right? And had you bid that bullish divergence, you were rewarded with 100% pump, right? And right now, Chainlink is showing that. Even though Chainlink has not been the top performer recently, if we do get a correction, and Chainlink really is not even flinching here in this pullback, it's down 9-10% in line with Bitcoin. But if we get a steeper pullback, I'm all over Chainlink. Last
man, that's
one,
some good,
which is
Forrest,
kind of
let me stop you real quick, man. That's some good stuff, bro. That's some really good stuff. It's interesting. And so I just want to shout you out and thank you so much. Guys, if you're enjoying the content, if you like Forrest, if you like trade setups and what levels to watch for, make sure to hit the like button and make sure to show our man Forrest some love. So please continue.
Yeah, last one. I know I don't want to take up too much time on the airwaves.
No, this
Actually,
is amazing.
two more.
Please, yeah.
FractShare has really popped off essentially in this liquid staking derivative narrative, and I don't really understand how FractShare plays into this type of regulation. But because FractShare is a decentralized protocol, it's on-chain staking, I think it would actually, if I'm not mistaken, really play into this extraordinarily well and be a more attractive option to stake your ETH in versus a custodial exchange, and it could potentially benefit. We see $10 has been the psychological level, right? That's acted as support. Anything under $10 starts looking psychologically cheap. Could be a nice little bounce there. $750 would be the top of our range, and we'd be looking to bid anything at around $750. And then the last one, kind of a dark horse here that is very interesting to me. You see, okay, down here at the bottom, that's Quant. This is our market, our altcoin dominance charts, right? So Quant outperforming the rest of the market. We kind of I wanted to point that out because we're looking at Quant. The top one's Ethereum, but this one is Monero. Monero in the bull market was nothing but basically down. Monero underperformed everything all bull market long, and then the bear market came in, and then once we kind of topped out in January of 2022, all year long, Monero has been outperforming the rest of the market. Up until recently, we've just gotten this little bit of a pullback, which could be a little bit of an interesting play. It is proof of work. It is a privacy coin. If regulation continues, maybe a little bit of a narrative develops, but it's really interesting that we've seen this long, drawn-out downtrend in dominance finally start to break a little bit with Monero here. So actually picked up a little bit of a long. Yeah, go ahead.
Let me ask you real quick, Forrest. So we covered news on this a couple days ago. The UK is literally looking to completely ban privacy coins like Zcash and Monero. Does that worry you at all? Well, what are your kind of thoughts on that in reference to what you're saying?
Yeah, so that's the counter argument to this. That's the risk is like these get completely banned, but it's also like if you tell your kid that he can't have ice cream for dessert, it's like, well, what does he want for dessert? He wasn't even thinking about ice cream for dessert, but now all of a sudden
he wants ice cream.
He wants ice cream for dessert.
True story. I also love ice cream. I was saying my kid definitely wants ice cream. It's the same. It's the old adage.
It's one of those things where there's definitely some risk there, but it could be an interesting play, and it could be undervalued based on the FUD around that level. It's interesting what dominance is doing. Dominance is starting to creep upwards.
Interesting, guys, man, that was some good stuff for us. I want to talk about, just real quick, recognize a couple people. So we had a super chat from Biomex, 999 said, glad some peeps joined the best entertainment channel, Sin City Crypto. Thank you, my friend. You gave a shout out to Tony, Soren Snail, and future NFT All-Star you watch. Got to have some taco trucks. And also Crypto Billy just keeps dishing money out. Was it payday today, Crypto Billy? I'm curious. Said free memberships to 25 more likes. And so our hype man, Jimmy, has been dishing out free memberships every single freaking show. So, Jimmy, we appreciate you. Forrest, I want to bring up a tweet thread you created, which, guys, if you're not following Forrest on Twitter, do yourself a favor. This dude puts so much time and effort into amazing threads and research at 0x Stacker. Humans are prone to price bias, and you did a whole write-up on this. Do you mind giving us the TLDR and maybe showing us a live example of how this has played out and how it maybe something is playing out currently?
Yeah, absolutely. So TLDR, I'll share my screen as I kind of walk through it. I've got this pulled up as well. TLDR is basically, you know how like for the longest time, a double cheeseburger at McDonald's was priced at 99 cents, and basically everything else that's priced, actually it's the specific number is like 60% of stuff is priced at with a ending in a digit of 9 or 99 cents. So it just looks cheaper. It's because we have left digit bias. So this is pretty normal in the advertising space. Everybody knows it. Everybody is vulnerable to it. And even if you know you're looking at it, you're still going to look at a price of something at $2.99 and think that it's closer to $2 than it is to $3. Or you're going to think it's significantly lower than $3 than 1 cent in your mind. So there's a couple people did a study on this. They sampled over 100 million stock transactions to see if this bias, this type of price bias or left digit bias, actually affects people in the stock market. And what they found was that the number of buys versus the number of sells around the integers and halves and quarters particularly were very statistically significantly different. So I know this is like a bunch of weird, complicated data. All you need to know is that at big even numbers in halves and quarters, right, you see a shift in buying behavior. So here's an example. Maybe they're so easy to run through. We can just run two examples really quick. Basically, what happens is once you've, and there's another thing going on here, which is price anchoring. This seems like a super unsophisticated way to look at the market, but it actually gets super sophisticated. Like once your brain has anchored in price, Monero around $25, as you start to, which is, 2 digits, that's just 25, right? That's 2 digits. And once you get into a bull market, at what point does Monero psychologically just seem way too expensive? Well, as soon as you tick from $4.99 to $5.01, your brain starts to round that closer to $1,000, right? Immediately. It's like $5.01 looks so much more expensive than $4.99. $4.99 kind of looks like it's still almost a deal. It's closer to 0 than it is to 1,000. And you end up getting a top because you cannot sustain price over $500. Same thing here, like with 250. But then as soon as you go from, a price anchor of $500, you just saw Monero top out at $500. In your head, you're thinking, okay, Monero's spent quite a bit of time in the $200 to $300 range. It's worth $200 to $300. And all of a sudden, your anchor goes from in the hundreds place to down here at $100. This ticks down to 99 and you drop from 3 digits to 2 digits. That looks super cheap psychologically, and it gets bid up because people are looking at Monero, which they think they've got anchored in their minds as being worth several $100s. And now all of a sudden it ticks down to 2 digits to $99. It looks very inexpensive. I'll go through one other example. You can pull this up on like anything really. And it holds, relatively true. It's not always perfect, but it's definitely there. Solana at $250. Once this goes to $251, you round that to $300. That looks very expensive, especially when you've anchored close to $1 in the beginning of the bull market, and for a long time around 20 or for a while around we're on Solana. Where was the? This is KuCoin. Goodness, that's we were missing a bunch of data there. There we go.
Shocker.
Let me pull up Sol USD. That's weird. Why do I have like half a data set there? All right. So once with Solana, it's like once you've anchored in this $20 to $30 region, right? And you go up to 251, it's like, all right, this rounds to $300, and that's over 10x where you've kind of anchored it at between $25 and $50 recently on that price consolidation. And then likewise, once you've anchored this in your mind at, Solana went up to $260, $250. As soon as this drops below $10 down to $9, that's a 3-digit coin, right? 260 that you're getting for 1 digit. Anything under $10 got eaten up really, really quick and sent back up to $25, which is another psychological level, all right? 26 rounds, up to 50. Right, and it's hard to sustain price action around above $25 for something that you've recently anchored at less than $10 in your mind. So it's really fascinating. The more you dive into it, it's super basic, super easy to throw these levels on your chart. But there's definitely a lot of merit to actually using these and factoring these in, maybe adding a little bit of confluence to your analysis by looking at that.
And I all the books and all the analysts I've talked to, they always say when you look at a candle, right? When you look at candles, those are people behind those candles, and people make decisions based on emotions, and it kind of ties into exactly what you're saying. I want to give some love. I want Robin to give some love to this chat. Robin,
real love to the chat.
You've been too quiet. I haven't heard you say a word for 30 minutes. I'm getting a little worried here.
I'm just absorbing, man.
No, I know it's this is good stuff, man. I love having Forrest on. Forrest Fridays are my favorite.
All right, so a couple of new people in the chat today. We got SUP, we got Bo Rabbit, Keith Bosher, 8K Crypto, and Rene Alejo. To all of you, hola! Welcome to Sin City Crypto.
All right. I want to pivot this conversation back to staking. Okay. And so I want to share what Mr. Huskinson said, who is the founder, CEO, IOHK, Cardano protocol. If you're an ADA fan, put a 1 in the chat. I put a 1 in the chat. I know Robin does. Forrest, I think he's an ADA guy. You like ADA? You like ADA, right? I know you're not a huge Cardano fan, but you like ADA. You like what they're doing, right? Maybe a little slow, but.
Oh, I thought you me, right? Me?
Yeah, yeah. I know Robin's take.
Yeah, sorry, I thought
spent
you
too
were
much
talking
time.
to Robin. I was like, yeah, he's a
good.
Cardano fan. Like, what? Yeah,
He's definitely a Cardano fan.
Yeah, I just put a 1 in the chat. I just
Oh, you did? Okay.
Yeah, I just put a 1 in.
Mhm.
Yeah, I like
Speaking
Cardano.
of chat, hit the like button.
Here's Cardano was one of my better trades in the bull market, honestly. Like I bought Cardano at between 10 and 30 cents and ended up selling it at around $2. The thing with Cardano is it really, like, if you just look at it historically, it really underperforms in the bear market. So if you don't get out of it, and my theory behind this is that it's very, very retail driven. You don't have those VCs pushing it. It's not really pushed by a ton of exchanges. So basically, it's like just a ton of retail volume pushing the price in, and then it gets sold off, and retail usually leaves in the bear market. It really underperforms in the bear market, but nothing outperforms it in the bull market. So no, and then from a technical perspective and fundamental perspective, I like it as well. I like Charles Hoskinson. I like what they're doing. They're just a little bit slower on the development side, which is fine. That's just, that's another approach. And in the long term, you don't have problems like Solana has had. But you also don't satisfy the really, really fast demand that came in like Solana did, right? Solana came in and satisfied demand for really, really, high throughput networks in a really, high demand period of time. And they benefited because of it. Obviously, there's, some VC stuff going on behind the scenes and whatnot, but Cardano, it's the tortoise and the hare. They're a little bit slower in terms of development, but they're building something that's very likely to be a longer term, more robust protocol. So I like Cardano, and is towards the top of my list for accumulation going into the next bull market.
The problem is, our space, we're so used to either hearing or going through, oh my God, I put $1,000 in and it's 10 grand in a month. Like, in the world of regular business, it takes time. And so Cardano, what they're doing, coming into the crypto space that's so new and so used to fast-paced everything, it's hurt them. But in the long run, if you're patient, it will pay off. Now, we like Cardano, but do we like what Charles had to say about staking? Excuse me. Charles does have a YouTube channel, and he did do a 20-minute video talking about staking and something that might be changing with Cardano staking. He proposes contingent staking to meet regulatory requirements. This is sourced from Finbold. As the crypto space comes to terms with the renewed regulatory scrutiny around staking activities, Cardano founder Charles Hoskinson has shared a model that could align with legal requirements. Operators in the space can consider the contingent staking model that centers around KYC practices. Under the model, Hoskinson noted the transaction certificate would be two-sided, meaning that both the delegate and the SPO would have to sign the transaction before it becomes processed. Hoskinson believes that with contingent staking, pool operators would be able to choose who they want to delegate to, which could help them better comply with regulatory requirements. So essentially, what he's saying with this contingent is, if you want to delegate to a stake pool, you have to send and sign a transaction. And on the other end, the stake pool operator has to also sign the transaction. So you can't just plug into any stake pool you want. The stake pool operator has to accept you as well. And in order to accept you, you have to, maybe submit some information, who you are or what you do. I don't know, man. What are your initial thoughts on this? It sounds like they're trying to be compliant in the eyes of someone like the SEC, saying, hey, look, we're even doing KYC on people who want to stake. What are your initial knee-jerk reaction thoughts to this, Force?
I mean, maybe it's fine if it's optional, but it's just a slippery slope because essentially, like, I'm not a big fan of KYC in general, especially when it comes to like these, supposedly decentralized protocols, because it forces you to dox, and then these stake pool operators can come in and say, or these node operators come and say, hey, we don't want to service you because we don't agree with you. That's a large part of why a lot of people are unbanked at the moment. Or, if you're somebody who no opinions on this person, but Andrew Tate said some stuff that the world didn't agree with and gets kicked off of social media, and it gets kicked out of his banks, right? Like that to me is a problem. Censorship is a problem. So as soon as you start requiring KYC, you potentially can no longer have access, or you get less access to the Cardano network than you would if it was, for a free for all and anybody could stake. So
I will say
initially
that
I don't like it unless it's completely optional.
If it's one or the other, then obviously, if the U.S. government, as an example, were to say, hey, you need to KYC or you're not staking, or whatever, however that looks. Let's just say that's the narrative. I'd rather have KYC built into the ecosystem as long as it's not blanketed across the whole chain. And maybe if you're a U.S. resident, hey, your government requires you do that. You want to stake from the U.S., then you need to comply with U.S. rules. Kind of not too far off from what we have now.
I don't like it.
You want to. I'm just saying that, or what's the opposite? I know you don't like it, but the opposite would be, hey, sorry guys, the U.S. requires KYC, so we're not going to offer staking in the U.S. That's the other option. If there was to be a KYC requirement for staking, like there was no going around it, in the same way that you need to KYC for sending $10,000 to a U.S. bank, you live in the U.S., you want to send $10,000 through the banking system, you got to KYC. You live in the U.S., you want to stake your tokens, you got to KYC. I'm not saying I'm in favor for it, but I'm just saying if that legislation came down the pipeline, and we're not far off of it, man. We are not far away from that being the rule, right? I mean, you have the SEC clearly stating that all staking is an investment contract. And so as part of the investment contract and how that operates, you need to KYC. And I think you have Charles Hoskinson identifies this. He identifies that
so you think
there
he's
is
ahead
a
of the
coordinate, as you said, he's identifying there's a coordinated attack coming up against crypto. And as a businessman, he is probably looking at the landscape saying, hey, if they were to ban staking unless you're KYC'd, let's get ahead of this now. So that way we can offer those particular services for a certain region if the government requires that.
Geronimo said, so he's basically proposing crypto Tinder. I'm sorry,
My question would be what if you applied that to a different network? Like, what if in order to own and operate Bitcoin, a Bitcoin wallet in the United States, you had to KYC and say, this is my Bitcoin address, this is my driver's license, it's attached to that, so it was really easy for the government to track. It's like, personally, I really don't like that. Like, it's not, I know, like, the middle ground is, compliance is, it could be a situation where it's one or the other, but I would think that the ultimate option is you make the United States live with the consequences of their decisions, and I'd be more inclined to fight against that legislation, right? It's just like, I think if you applied that to Bitcoin, people would freak out. Like, you have to KYC to own and you have Bitcoin. I can't have a Bitcoin in an address that doesn't have KYC attached to it. That's crazy. So I think it just becomes a really slippery slope.
Yeah. Where do you draw the line? You know what I mean? Like, here's the thing. The question is, where do you draw the line? Because, hey, you sell your Bitcoin, you have to pay taxes on it. I understand that's not on the Bitcoin network. That's per the government saying you made this amount of money, but they're going to put their hands in the pot. They're going to get their money where they can, and they're going to enact control where they can. And, what you're going to have is chains, companies, exchanges that either comply or they're just going to go overseas. And I don't know what is better, man. I don't know what is better. Look, I don't know if it's better just to say, screw it, go overseas, or hey, bend the rules that is blockchain and DeFi and stay here, you know? I don't know. I don't know which one I want. I don't want crypto to leave. At the same time, I don't want crypto to change just for the sake that a handful of congressmen and senators and heads of different branches decide that they don't really like it in the way that crypto is running right now. You know, so we're in a weird spot right now here in the States, man. And I think a lot is going to unfold in the next year or so. I think there's going to be some more regulation coming down in the form of enforcement, not in legislation. And I hope that we get legislation and clarity so that way we don't have to rely on the enforcement side where they can just pick and choose and create narratives. So,
you know what narrative is being created? Is that today is payday, apparently, because people just keep dropping money left and right. Our hype man, Jimmy, dropped 20 free gifted memberships. So to the official hype man, thank you. And if you are a proud recipient of said free membership, congratulations. Also, Biomex, $2 super chat, said KYC requires KY jelly soon. So, yeah.
and then we do got a lot of new people in the chat here. If you're new here, say hello so we can drop an hola back at you. Just a little love to the chat real quick. We got BC in the Matrix, Derek Wood, Yari, J Daz, Bunny from the 80s, Bradley, A1, Steven, Jesse Kelly, Wick, Mario K, MT Candy, and then Chris Morris and Hoven, Calvin V. To all of you, hola! Welcome to Sin City Crypto.
Oh man, what a show. Forrest, we're going to let you go, my friend. Guys, please, if you haven't done it already, go subscribe to Sistine Research on YouTube.
And Sin City Crypto.
And Sin City Crypto.
A lot of red names in here.
Also, go follow Forrest on Twitter at 0xstacker. And yeah, Forrest, we appreciate and love you as always, my friend. Thank you so much. You know, Robin, yesterday, he threw shade at you. He said Crypto Lifer is his favorite TA person. Well, guess what, bro? You
on
are
Thursdays. He's my favorite Thursday
you're a liar.
TA guy.
You are my favorite analyst. I appreciate you, my friend. And all jokes aside, we love having you on. Thank you so much. To all the new people, go subscribe or go support the guests that support the channel and join our show and bring some amazing content our way. So, Forrest, thank you. Anything you want to share with us before you leave?
Oh wow! No, we pretty much just covered it all. You know, support Sin City Crypto, support the channel, drop a like before you go. Make sure you hit subscribe. Check out the links in the description. All of the above. You know, I appreciate coming on as usual.
We appreciate you, my friend. We will see you next week. And Forrest, I want we've got a Ripple video coming out.
You a fan of Ripple?
Later today. XR.
I'm iffy on it. I'm iffy on it.
Be careful, bro.
Rocco, cut him out. Cut him out.
Careful. No, stop.
No, sorry.
XRP Army's crazy.
Interested to hear your thoughts on it, though. Maybe you can convert me.
All right. Well, the video's coming out later this afternoon. Make sure you guys check it out. Forrest, thank you so much again. We appreciate you, my friend. Enjoy your weekend, and we will see you next week.
Peace.
Cool. You guys.
All right. And then,
all right.
Before you do your stupid finger thing, we got
this
DRK.
One? This finger thing?
DRK with a bunch of letters I can't pronounce. We got Stephen Kimbrough and Benha. Hola! Welcome.
What are the letters you can't pronounce? ABC?
It's DRKZWRKZ.
Dark Zawarden.
Yeah.
Which one is it? Dark Works.
And
Dark's Works.
And it's actually the official one.
Dark's Works.
Not to be confused with the unofficial Dark Works.
Yeah.
There you go.
Who is your dark horse? Kidding. Who do you think is going to win the Super Bowl on Sunday, bro?
Oh, man.
You think it's the Chiefs?
So, you know what I just thought about is this is our last show for the Super Bowl.
Or the Eagles?
All right, let's make a pick here. Rocco?
Yes.
We're not talking football.
Who's going to win, the Eagles or
talking,
Kansas City? Who do you got?
Definitely the Eagles.
The Eagles, huh?
Yeah.
Do you think it's going to be over or under 40 points?
Over.
Okay. David?
Rocco, what is over under 40 points?
I'll tell you a story. Can I go Rocco story time?
Rocco story time. Go
we
ahead.
got some Rocco. Ooh, this
I
is
was
a treat.
working in the restaurant, and they asked me exactly the same question about a Super Bowl where 25 people put money, and I won.
Ooh.
I have no. I
You
have
won
no
because
idea.
you studied, or you won because it's just beginner's luck?
Beginner last. I have no idea.
I love how it's so nonchalant. I have no idea.
So
Beginner's luck.
Rocco's got over.
I'm taking
over
the Chiefs.
40.
I'm taking the Chiefs.
Eagles.
And the Eagles lucked out with Frisco. I think the Chiefs are going to win.
Over or under 40.
Over.
Mm.
Yeah, over 40. I think it's going to be a good game though. I think the Eagles. I think Mahomesies. Patty Mahomes. Unless his brother
it's going to be the Eagles under.
Jackson comes out and does some weird stuff and brings bad juju.
I'm going Eagles under, man. Eagles under, bro.
I'm going Chiefs in the over. What's your pick, you guys? Let us know. While you're making your picks, please make sure to subscribe to Sin City Crypto, subscribe to Sistine Research. We have another packed week next week. We're starting our week with Gareth the God Soloway. Will be joining us on Monday. Also, again, our Ripple video does come out in T-minus a few hours. So many subscribes. Go follow us on Twitter at SinCityCrypto1. Go follow us on Instagram at SinCityCrypto_1. Follow us on all the other social medias. Follow us here. Follow us there. But mostly, follow us everywhere. With that being said, Rocco.
Terrible intro, terrible outro.
Friends, family, friends and family of friends. We thank you guys so much for joining us on this beautiful Friday. Big shout out to our man Forrest. On behalf of myself, Robin, Rocco. We love you guys. We'll see you next week. Until then.
Also, we got Harpin here. We got
You can't
Mr.
do that's the outro.
Hola.
That's the outro. You don't get to do, plus we have this. No.
Right.
See you later.
Will it be long? Hola.